Good morning, everybody, and welcome to the OPT Network. This morning, we're going on point with an expert on helping entrepreneurs raise capital to support and grow their business. Her name is Jenny Kassan. She has been an attorney for social enterprises for 22 years. She's also a certified transformational coach, social entrepreneur, investor, and finance innovator. Her formula for mission-aligned capital raising helps diverse entrepreneurs raise literally millions of dollars on their own terms. She runs her own firm and is president of Community Ventures, which is a nonprofit dedicated to community, economic, and social development. This morning, Jenny joins us all the way from the Bay Area, San Francisco, to talk about her book, Raise Capital on Your Own Terms: How to Fund Your Business Without Selling Your Soul. Jenny, good morning and welcome.
Thank you.
I'm going to tell you, that is a lot to unpack. I want to first start by talking about how you came into the whole idea of helping entrepreneurs raise money that would help to start and grow their businesses.
Yes, well, I spent the first 11 years after law school at a nonprofit, starting businesses out of the nonprofit that were benefiting this low-income community where we were working. And I saw how business can really be such an amazing force for good. As great as nonprofits are, you know, businesses have a lot more economic power. And so after 11 years there, I went to work at a law firm supporting small businesses. And I realized that a lot of small businesses do need to raise money. And that's when I found out that there are a lot of legal requirements that go along with raising money. So I decided to become an expert on the laws that govern how you can actually go about raising money. And I realized that most lawyers use a very cookie-cutter approach for all their clients, but really there are so many different ways of doing it. So I happened to be working with some amazing businesses that were very creative, wanted to raise money in a way that would allow them to stay true to their goals and values and serve their communities in the way they wanted to do it. So we just got very creative about designing strategies that would allow them to do that. And we started seeing a lot of success. So I just got addicted to helping entrepreneurs raise money. And I think too many entrepreneurs often, and I have to say especially female entrepreneurs, often think that raising money isn't for them and they should just try to bootstrap and do everything on their own. And unfortunately, that can be a major cause of business failure. So
Sure.
I love to let entrepreneurs know that it is possible to raise money and you don't have to give up control or, you know, have a relationship with your investors that makes your life difficult. They can be your biggest cheerleaders, your biggest fans who are happy to benefit as your business grows.
Right. And I think really what's important to note is that most entrepreneurs or would-be entrepreneurs really need capital. They need either a bank loan or they are using credit cards or whatever funds they have to start their business. And what you're here to say and what you have done in terms of the research and the work is to say that not necessarily true.
Yes, well, I think, it is true that you need resources to start and grow your business, but the question is where are those resources coming from? Banks can be really difficult because really most banks won't even talk to you unless you already have 3 years of profits. And even if you are able to get a bank loan, the terms can be very, very onerous. You have to make monthly payments. If you miss a payment, you get into all kinds of trouble. You have to have collateral. You often have to have a personal guarantee. So that source of funding can be very scary and can really take your business down. But if you have investors that are patient, that are not requiring you to put your personal assets on the line, that understand that it takes time to grow a business, that is an amazing source of funding.
And so according to the statistics that you write about 82%, which is astronomical, 82% of small businesses fail because of lack of cash flow.
Yes, I mean, it can be a huge problem. So many of us have been in that bootstrap trap where, you just don't have the resources to do within your business what needs to be done to have a successful business. So even if sometimes cash flow can be a huge problem, like if if you need to carry inventory or meet certain orders, but even without that, just businesses need to be nurtured and given resources to be successful. And if you're a founder and you're trying to wear all the hats, you're doing the sales, you're updating your website, you're doing customer service, you're, going and buying office supplies, it's just really hard to have a successful business, and you get exhausted, you get burnt out, and naturally your business is going to suffer, and your customers won't be happy. And I just see that happening so much. And unfortunately, that can really kill a business.
Sure. So let's move into what types of businesses, because I'm sure that people who are listening and watching this morning who are entrepreneurs or who are wanting to start their business are saying, okay, is this possible for me? Can I raise money for my business? Let's share, which businesses can raise money and how do you start?
Well, I have worked with so many different kinds of businesses. I have yet to see a business that cannot raise money. I've worked with, and not just different kinds of businesses, but businesses at different stages. So one of my very first clients was basically just an idea of a grocery store that a small group of people wanted to build in a low-income community in Oakland. And it was really just an idea. They didn't have a location. They didn't have any staff. They certainly didn't have any revenue. And this was many years ago that I worked with them, and they've raised now several $1 million. Wow. And they're finally getting ready to break ground about 5 years later after they raised their first $1 million. So you could be a grocery store, you could be a restaurant, you could be a software company, you could be a service company. I actually raised money for my own business, which was a consulting and law firm. So really, I honestly believe that any business can raise money. The key is just finding the people out there that think what you're doing is great, really see your vision, and want to be a part of it.
And that's one of the things that you write about in the book is the mission of your business and how to connect your mission with the right investors.
Absolutely. I have been so lucky that all of my clients are very mission-driven. They obviously want to make great money, but they also want to make the world a better place in some way with their business. And this can be in so many diverse ways. So I've had a client that has a pie shop, and so her mission is to make delicious pies and also treat her workers really well and make sure her workers have a great income and a great experience at work. I have clients that are really passionate about, providing an amazing educational experience for girls. So it's just, there's so many different ways that you can have a business that not only makes you great money, but also makes the world a better place in some way. And if that's you, and I find so many businesses are that way. I mean, so many founders, they want their business to serve the world in some way. That makes it a lot easier to raise money because you will find people that are so excited and passionate about what you're doing. Studies have shown that a majority of investors want their investments to really support their values. And this is becoming more and more true. For younger people, that's a much stronger desire than for the average. So as more and more young people start to get some money to invest, it's becoming more important that, for investors to be able to put their money in a place that makes them feel really good and that they can feel like they're supporting a business that's contributing.
Absolutely. Let's do this, Jenny. Let's get a break here. But when we come back, I want to talk about ways that money can be raised for entrepreneurs. And more importantly, what is the relationship between investor and owners, plus a lot more. Stay on point. We're back right after this. Welcome back, everybody, to the OPT Network. This morning, we're talking to would-be entrepreneurs, and people who are on the journey to try to grow their business. Maybe you were thinking there is no hope. You don't know how you're going to get the next dollars to expand or keep your doors open. Well, our guest this morning is an expert on raising capital for your business, and she has written Raise Capital on Your Own Terms, How to Fund Your Business Without Selling Your Soul. And I think that last part is really loaded, Jenny, that a lot of people feel that if they raise money or if they seek out an investor, and you write about the myths in the book, that they will somehow lose control and the investor will come in and run their company. You know, tell us about that and how it works.
Yes, well, so in the last few decades, there is this one style of raising money that has gotten a lot of media attention. And if you kind of search on the internet about how to raise money for your business, you'll see a lot about this one type of raising money, which I call the venture capital model. Right. And so this is the model that a lot of tech startups use. And, you know, really, there's nothing magical about it. It got created a few decades ago, and it's worked for a few companies, but it really is not a good fit for 99.9% of businesses. But unfortunately, and really very few businesses use that model to raise money. Only 6% of the fastest growing businesses have taken that kind of money. 6% of the Inc. 500. So
and don't you think, Jenny, that
in our country don't take that money?
Right.
But that when people look into what it means to raise money, that's often what they'll learn about. And part of the venture capital model is the investor will come in and take over your business and become your boss. And you hear a lot of horror stories about what that is like. So that's what can really scare people from raising money. But the good news is that that doesn't have to be the case at all. None of my clients have ever given up control of their businesses, and they've raised anywhere from, several $100,000 to millions of dollars.
And don't you think that, Jenny, people think of venture capitalists because really that's the most popular way of investing that is really out there? None of the other ideologies that you talk about or write about in the book are, really talked about as much as venture capitalists.
Yes, and I'm not exactly sure why that is. I think there's something about venture capital that kind of gets people excited, captures the imagination. Plus, they have very high paid people that do public relations for them, and so they get a lot of attention. And every now and then there will be a big success story that will get a lot of media attention. Like a company that started up and then they struggled along for a couple years, and then all of a sudden they hit it big, and everyone became multi-millionaires and billionaires, and so that really captures a lot of attention and imagination. But that doesn't talk about the vast majority of businesses that take that money actually don't make it. Uh-huh. That's part of the model. The model is based on the idea that they're going to push you as hard as they can to grow as fast as you possibly can, and then sell for a very high price. And they expect, believe it or not, that 9 out of 10 of the companies they invest in won't make it. So the whole model is built on a high likelihood of failure. So I believe it's actually a very destructive model just in terms of the overall cost to the economy and to the people that get that kind of funding. But still, it is the thing that a lot of people hear about and know about, mm-hmm. and they don't realize that there are all these other ways of raising money that really people have been doing forever. I mean, even, our ancestors from thousands of years ago have been raising money in more community-oriented ways, supportive ways that don't, that aren't all about, we just have to make as much money as quickly as possible, no matter who gets hurt in the process.
Right. Now, you yourself have raised hundreds of thousands of dollars for your business. You have helped other companies raise millions of dollars. When you think about those numbers as a small entrepreneur, I know those people are wondering, how much of my company will I have to sacrifice for that money?
Right. Yeah, so that's an important question. How much ownership do you give up of your company? So one thing to really understand, and a lot of people, if you research online about raising money, a lot of resources will tell you that giving up ownership is the same thing as giving up control. And that's not true. Actually, that client I mentioned, the grocery store, they raised millions of dollars in and gave away quite a bit of ownership of their company, but they didn't give up any control because the ownership interests don't have any voting rights. So that's one thing to keep in mind. So it doesn't have to be so scary to give up a piece of ownership of your company if you know you still have control. Another thing is that there's really two types of investments you can offer in a very broad sense. And equity is one, and that's where you give up ownership of your company. So people own a piece of your company. The other type of investment you can offer is debt. And so when people think of debt, they might think of a bank loan, but there's so many different ways you can design a loan that can be much friendlier than a bank loan. For example, most of my clients only make an annual payment instead of a monthly payment. Mm-hmm. Often the payment might be different depending on the revenues of the company. So if you really don't want to give up any ownership of your company, you can do a debt offering where your investors are still getting paid and collecting, slowly getting their money back over time as your company starts to do better and better, but you're not giving up any ownership.
So there are lots of ways to do it. So you could do it that way, but then when the investor invests in your company and the debt is paid back with the interest, is the investor still invested in the company, or how does that work?
Yeah, well, with debt, there is an endpoint. So, and there's different ways you can design it. There's actually this interesting thing that's becoming more popular these days, which is a type of revenue-based debt, where you just say, you're lending me money, and every year I'm going to pay you back a certain percentage of my revenues, and I'm going to keep doing that until you've reached a certain amount that you've been paid back. I don't know how long it's going to take, but eventually you're going to get your money back plus something on top of that, and then we're done. So with debt, once you've met your obligation, however you've designed it, that you're done. Whereas with equity, there's no automatic way that they're going to be exiting out of their investment. You could have equity investors forever. Your equity investors could die and leave their equity investment to their kids. But with equity, too, you can do things where there is a way for them to exit out of their investment without you being forced to sell the company. So there's just so many different creative designs you can create depending on what you want. Do you want your investors to be with you for the long term, or would you like them to eventually move on?
Sure. And I think when you talk about raising money and getting others involved in your mission, because your mission is really your baby, how do you help entrepreneurs understand, because we've talked to entrepreneurs over the years, and one of the biggest concerns that entrepreneurs have is, will I be able to pay the investment back or the loan? We'll answer those questions plus a lot more right after this. Stay on point. We're back in a moment. Welcome back, everybody, to the OPT Network. Our guest this morning is Jenny Kassan. She has been helping entrepreneurs raise money and sustain and grow their businesses for over the past 2 decades. She has written a book that is so comprehensive that if you're trying to figure it out, this is a must-read for you. It's entitled Raise Capital on Your Own Terms, How to Fund Your Business Without Selling Your Soul. And before we went to a break, Jenny, I was talking about those fears, those concerns that entrepreneurs have about getting a loan or about taking on what you would consider debt. How will I pay it back? I'm not going to do that because, I don't want to be strapped in those ways. How do you help entrepreneurs overcome that in order to grow their business?
Yes, I hear that a lot. And I think one important thing to realize is that when you're raising money from investors, there is never any guarantee. With a bank loan, if you don't pay it back, there are really serious consequences. But with investment, people do lose money. I mean, when people invest in the stock market, they know they can lose money. So you have to understand that your investors are big boys and girls, and they can make their own decision. They know there's a risk. Legally, in your documents, you're going to make it clear that there is a risk that they could lose their entire investment. But your investors are going to see the fact that you're so concerned about not wanting that to happen is going to make your investors all the more interested in investing in you, because they know that you're going to do everything in your power to make sure that doesn't happen. But if it does, it does happen, and every investment has risks associated with it. And I have to say, the first time I raised money, we designed our investment in a way that was a little bit challenging to pay back. And there was a case where I left the company, but the company was a bit late in paying back one year, and no one said anything. The investors are so supportive. If you're a few months late, and obviously you can't generalize, but in my experience, your investors love you. If you make it clear that you're doing your best, they're not going to make a big deal if you're a few months late. So I think that's another thing, is just to realize your investors want you to be successful.
Right.
They're not there to kind of pull you down the minute you're one day late on a payment.
And your investors, I think it's important too to share that when you find an investor that is as passionate about your mission as you are, then they buy into your mission and your passion as well.
Absolutely. And they want to see you succeed, and they trust you because they get to know you, as they're going through the process of making a decision whether to invest. And they know your passion. They can see your passion. I personally, every time I have an extra dollar to invest, I try to invest it in my clients and small businesses that I know, because I see their passion and their commitment. That to me feels like a lot safer investment than putting it in the stock market, where there's no relationships at all. It's all about just the roller coaster ride.
Mm-hmm. Now, let's talk about the pitch. For those entrepreneurs that are saying, okay, Jenny, you have my attention. How do I pitch it, and to whom do I pitch it?
Yeah, so this is where you really do need to decide on what we call our legal compliance strategy, because there are a bunch of laws that regulate how you are allowed to go out and talk to people about investing in your business. The good news is there are quite a few options there. So one thing that you'll want to decide early on is, do I want to be able to do what we call a public offering, where you can actually go out in the public, tell everyone, hey, I'm raising money. Would you like to invest? And I love that way of raising money. My client, the grocery store I mentioned before, that's how they were able to raise the several $1 million that they've raised, is by just telling everyone, putting it up on their website, talking to the media. And there are some legal hoops you have to jump through to be able to do that. But it makes it so much easier, because people that you don't know can hear about it, get excited. You can set the minimum investment fairly low. A lot of my clients set it around $500 or $1,000, so that it's accessible to a lot of people. And, that's a great way to start getting the word out. And then, of course, you do want to still have one-on-one conversations. And I don't use the word pitch. I use the word conversation, because investors are human beings. They, you need to take some time to listen to them and understand their dreams and goals and values, and see if it's a good fit, and just talk to them about it. And if it's a good fit, both of you will feel it, and it'll happen. It doesn't have to be this formal pitch that you have to practice for 5 months.
Wow. And so when you do a public offering, what does the public get for their investment?
Again, it's totally up to you to design that. Just as with a public or a private offering, you decide what you're offering. You decide on the terms. So it could be debt, it could be equity, whatever you decide.
Okay. And so that's one way. What's probably the easiest way that doesn't require a lot of legality in order to have the conversation about investment for an entrepreneur?
Yeah, well, I mean, every time you raise money, whether you're publicly advertising or not, there are some regulatory issues that unfortunately, well, I shouldn't say unfortunately, they're probably there for a good reason. But federally and at the state level, there are going to be some compliance things that you're going to need to do. So, I keep saying unfortunately, I don't mean to say that. You need to read my book or get a lawyer who's a specialist in what they call securities law just to make sure you're not breaking the law. But it is true that there are ways to do it that don't require a ton of legal work or filings. So if you don't publicly advertise it, you would just have one-on-one conversations with potential investors, and these are people that you may already know, or maybe a lot of my clients say, oh, well, I don't really know anyone. Well, I say, go to places where your ideal investor is likely to be, so depending on what your business is all about, often it may be either your customers or your potential customers that are going to be your best investors. And studies have shown that when your customers invest in you, they spend a lot more money with you, they refer you to more people. So looking at either your existing customers or people who might be potential customers is a great place to start looking for potential investors.
Sure, and I think for those investors, and you kind of alluded to it earlier, when you have money sitting somewhere that's not really earning a whole lot of money, but you just have it sitting there, those are people that are really potential investors, aren't they?
Absolutely. I mean, you hear even the most conservative financial advisor will tell people you should diversify your portfolio, and you can tell your potential investors, hey, do you want to really diversify your portfolio? Take 1%, 5% of the money that you have invested in the stock market through your retirement fund or whatever it is, and invest it in a small business. The stock market has such crazy cycles that are so unpredictable. Why not invest in something in your own community or, a business that you know and love? It's a no-brainer, really.
Sure. One of the things that I think a lot of entrepreneurs, especially if they're just getting started or they're on their way, are having issues with, and you write about it in the book, the valuation of the company, what that is, how that should be determined in order to move forward and offer up a piece of your company.
Yes, valuation is a difficult question. You don't need to worry about it if you're offering debt, but if you are offering equity, you have to come up with a price. And a price for equity means that you're putting some kind of a value on your company. But it's nothing to be intimidated about. You really just need to sort of pick a number based on what you do is you say, okay, I want to raise X dollars, and for that amount of money, I want to give away X percent of my company. And that's going to tell you the valuation to use. Really, it's that simple. People try to, use other formulas, but for most businesses, it's going to be so arbitrary that you just need to come up with a number, and most investors will be fine with it.
I think it's important, and you wrote it in the book. You said, there is a lot of bad information, but you have done the work, not only in your own business, you've done the research to really help entrepreneurs understand this whole process, and you have broken it down. And it's really important that those people who are thinking about getting investors get a guide. I don't even call your book, it's more of a guide on how to do it and how to do it right.
Thank you so much. Yes, I do feel that knowledge is power, and once you really understand what the steps are, it makes it so much easier to design something that really works for you. And
Absolutely.
Get creative. I call it almost like a work of art. Design your capital raising strategy in the same creative way that you design your business.
Right. And before we've got to let you go, I want you to tell people how they can get the book, Raise Capital on Your Own Terms, How to Fund Your Business Without Selling Your Soul, and also some of the events that you have that could also be helpful to entrepreneurs.
Yes, well, you can buy my book anywhere you normally buy books. I do have a lot of resources on my website that has more information that can be very helpful. My website is jennykassan.com, and I do have a training event coming up in early March called Fund and Fuel Your Dreams for women entrepreneurs who want to learn more about how to raise money for their businesses on their own terms.
Jenny, it's a great book. We want to thank you for writing it and taking such care and making sure that you have all of the information or much of the information that any entrepreneur needs if they are considering finding an investor for their company. Thank you so much.
Thank you so much.
Indeed. Hey, everybody, the book, once again, Raise Capital on Your Own Terms, How to Fund Your Business Without Selling Your Soul. Stay on point. We're back right after this. Good morning, everybody, and welcome. I'm Carlette Christmas.
And I'm Glenda Stock, and this is our final point today, On Point.
Glenda, our guest this morning, Jenny Kassan, Raise Capital on Your Own Terms, How to Fund Your Business Without Selling Your Soul. And a lot of young entrepreneurs are challenged by that.
No doubt. I mean, she gives a great deal of wisdom, I think, in listening to our guest today. It's apparent that she's helped people at every level.
Right.
And I think that's what makes her so relatable to our audience. And so often we just think about the big corporations or, the big venture capitalist approach. And basically she's educated us, I think, in a very, very 101 instructional way today to understand that as small business and as entrepreneurial thinkers, that's probably not the path that's going to serve us unless we want to give up control of our business.
Right.
So I found her guidance to be very, very sage, and I think she is also, in listening to her nonprofit background, provides us a basis for understanding that difference. So many, many times entrepreneurs have been in a giving, doing mode, if you will, but they have not been in a business management mode. And there is a giant difference. And as was always taught to me, there's a fine line between profit and loss.
Right.
And, sometimes it's the difference of making that best business decision about the people you hire, the kind of building that you choose to do business in, and, we have visions about our business and we understand our missions and we become very passionate. But do we have the business acumen to overlay a business plan with numbers and performance? So that we can really see, is this business going to sustain itself? Is it going to pay for itself?
Right.
Is it going to meet the needs of everyone that I need to be a part of it, to be this huge success? So her book is filled with valuable information for people that find themselves in that mode.
Right. On every level, like you said, whatever level your business is at, she really gives you good direction. And what a lot of small businesses find themselves in the position of is not having enough money or not having the capital to take that idea from out of their head and bring it into fruition.
And I think what she really brought home to so many is to understand, this company that she applauded their efforts, 5 years it took them. So often, we're not patient enough. We want instant gratification. So we want somebody to write us a check and overnight we're in business.
Right.
When sometimes if you've actually gone through the trenches and earned it,
the proving ground.
$500 at a time, I think it forces you to examine the business side of your business. And even at McDonald's, it was very clear that people who had worked in the McDonald's stores, yes, they could work circles around people in the operations end of the business.
Right.
But many times they did not have that business mindset to understand how to monitor what they were spending. Because just because you're going to the bank every day with these giant deposits does not at all mean
Right.
that that money is staying in your account,
Right.
when you meet all the obligations that go with it. So really forcing yourself to trace the dollar in your business. By that I mean, take that dollar and begin to subtract the cost of doing business
Right.
on a daily basis from that dollar. And sometimes you'll be mortified to find out you have a penny left.
You'd be mortified.
Yeah. And that's
Right.
that was a true exercise that we actually did with a lot of our store managers to help them understand, number one, that pennies count.
Right.
And number two, that from every dollar, this is really what becomes cash flow.
For your business.
Cash flow.
Right.
And that, so it's a great exercise and something I think that she really has struck upon a need, a unique niche. And especially for women, I think many times that we just don't pursue our business dreams because we don't understand the business acumen that's needed to go with it.
And one of the things that she talked about is understanding how to structure your business. And most people, after they take it out of their head and then they start to go to work, most people don't understand the structure. And so this book in itself is a teaching guide about questions and things that you need to know that you probably might not ever think of until you start on that journey.
Great wisdom and something that we hope anyone that's thinking about starting their business, or maybe you're in a new business that's struggling, and maybe there's just a couple of steps that you need to take to help you pull that over the line. And it's never easy to find yourself feeling a failure in something that you're so passionate about. It's such a blow.
You ask yourself, well, why couldn't it, or why didn't it work? And sometimes it's like you said, Glenda, it could be one or two things, and that's why people like yourself that has such sage business acumen and information, books that put it in black and white, every question that you thought you might have is answered in this book. And then you can kind of go from there and see, what turn you might need to take.
I wish I'd had this book some years ago. I wish I'd had this book. It could have saved me some turmoil, perhaps, in my life. So don't miss out on it. It's great wisdom, and don't miss out on your dream. There's opportunity and there's ways to get it done. But educate yourself on the things available to you.
And isn't that the most important thing?
Most important.
Absolutely. We're out of time for now. Once again, the book is called Raise Capital on Your Own Terms, How to Fund Your Business Without Selling Your Soul. I'm Carlette Christmas.
And I'm Glenda Stock, and this has been our final point today on Point.
Stay with us, everybody. We're back to wrap up right after this.